Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'm Kevin Hincks. I have two paper money trades for you today on two high-profile names, Tesla and Meta Platforms. Two different trades, two different directions, actually, if you think about it. First, let's get to our first trade, and that is Tesla. Now, for those people watching Tesla over the last couple of weeks, you've had a dramatic sell-off, as you know, and then a recovery the last 2 days of pretty significant amount. So how do we look at Tesla? The paper money trade that I have for you today is a bullish call diagonal, looking for the expected move of next week, which is about $22, looking at where the stock is sitting right now. And again, this stock is moving all over the place. It traded as high as $362 today. It's now trading closer to $351 today. So the prices are going to move all over the place. So just bear with us. Remember, the most important thing to learn today is the strategy. So in Tesla, we looked at the March 7th, February 21st, just a 2-week trade in Tesla. Why do 2 weeks? Because the premiums are big. And so the way to get them the most affordable is to move those strikes closer. The further you go out, the bigger the premiums, the more money it's going to cost you in terms of net debit. So I went to the March 7th expiration, bought the 360 call. Then I went to next week, February 21st, and sold the 380 call. Now the debit on that was $13.30. It's about $1 lower than that now. It's about $12.30 now because the stock is moving pretty quickly today, as it always does. You always have to be a little sensitive to price movement here. But the risk on this trade, always on the diagonal spread, is the debit paid on this spread. So that's the most you can ever lose on a diagonal, is the debit paid. Remember, you're looking for a move up towards the 380 strike. You're long the 360 strike. So you are, remember, as it sits right now, it's different because it was in the money, now it's out of the money. So the theta numbers will change a bit. You can adjust the strikes if you want to align. Maybe it's closer to the 355, 375 or 350, 370, but that is your personal choice. But the strategy is a call diagonal in Tesla, using the expected move, which is about $22. So traders love to round. So we did a $20 call diagonal in Tesla. And so you're looking for a move again within the next week towards that 380 strike. Okay, there's our Tesla trade. Now let's get to our next one, and that is Meta Platforms. Now Meta Platforms, if you're watching that the last few weeks, it's up 19 straight days, and frankly, it's up again today, trading right around $730. And the news today, they raised their dividend. So Meta Platforms on a historic run. So the trade we put on there is something on the bearish side. Why? Well, the relative strength indicator is up to 83. Doesn't mean it can't go higher. Doesn't mean it can't stay there. It absolutely can. So we put on a complex trade where we sell an upside call vertical, take that the premium that we collect there on the call vertical, and buy a downside put calendar. So a neutral to bearish play with a bearish play combined. Now, you could do one trade or the other, or combine both to make a more complex trade. So let's get to that. So first thing I did, I sold next week's 750, 760 call vertical. Then took that credit and helped me pay for the 705 put calendar. Remember, the expected move for next week, about $20. So that takes you right to the 750 strike. And on the downside, 705, could you do the 710? Yes, you could, but the strikes, those are your personal choice based on what you think Meta Platforms is going to do. So we looked at, right, I put it in about $1.40 debit. It's trading all over, trading closer to $1.90 now. Again, this is a trade that's moving all over the place. The stock was considerably higher, up to 732 this morning. Now it's below 730. So Again, the risk on this trade, now this is important. It's different. Now, if you just buy the put calendar, the risk would be the debit paid. But you're combining that with a short call vertical. So the risk is what you paid for the call vertical, which in this case about $1.40, $1.50, where it's trading now about $1.90, but you've also got a $10 call vertical. So the risk is the $10 in the call vertical plus the debit. So remember that. It's $1,000 plus whatever you paid for that trade is the net risk or the max loss on a trade like this. So it's a little different than just the calendar because you've got exposure on the short call vertical. You're collecting theta, you're short deltas, and this plays for a neutral to bearish on the downside, targeting the 705 strike, but the risk on this trade is above $750. All right, that's our show for today, everyone. We did a long call diagonal in Tesla and a complex trade in Meta platforms. Have a great weekend, everyone. We'll see you Tuesday with another edition of Daily Trader. I'm Kevin Hincks.